All right, guys and gals, back to work. Back to work. Boy, another fantastic day today. Hope you guys made some money out there. Got some beautiful bull traps, some bear traps. If you watched last night's video, hope you guys made some money today. Now we get non-farm payrolls, non-farm Friday coming tomorrow. Not your average Friday. But I'll tell you, charts look great tonight. I got a bunch of trades, a handful of trades I'm watching for tomorrow morning. I'll cover all the entries. We'll cover all the exits, different scenarios. By the time we're done tonight, you'll have a roadmap to make some money on non-farm Friday. Before we jump in though, and to my favorite trades for tomorrow, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe. And if you guys enjoy these videos, if you like these lessons, hit that like button, will ya? And give me a shout out, give me a hell yeah down in the comments section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro though, let's go make some more money on Friday morning. It's been a hell of a week, first week of the month of September. Boy, charts ready to go tonight. Nasdaq triple Qs are all ready. Oh, the E-mini and the SPY is ready. I have three very important clues, simple but very important clues right now on these charts that are telling us where the winning trades, the money's made for tomorrow. One of those clues is right here on these 60-minute, these hourly time frames. You'll notice right now the S&P and SPY, the Nasdaq triple Qs, they are chopped up in a range environment right now. Now ranges act like magnets. So we have to assume that buyers are waiting to buy below those lows. Sellers are waiting to sell above those highs. And of course, tomorrow is non-farm Friday, so be ready for some breakouts. We'll talk about that as we go deeper into the video. But right now, buying low, selling high, fake out breakouts, right? Fake out breakouts is what this 60-minute time frame is telling us right now. Now, that's great because that gives us an overall bigger picture. But the one thing these hourly charts don't do, they don't help us time the entry. We're going to use some faster time frames, some tick charts here in a moment to help wrap this all together. I have two more important clues on the tick charts and help us time the perfect entries for tomorrow. Now, before we jump in though, let's cover our schedule for tomorrow because tomorrow is a Friday morning. It's not your average Friday. There's two things on my radar for tomorrow. One of them you probably know already, right? The employment number, the non-farm payrolls, arguably the biggest news of the month because we know the Fed is watching this to make a decision on what they're going to cut rates in a few weeks from now. Expect some volatility around that non-farm payroll number. The second thing on my mind for tomorrow is tomorrow's a Friday. Now, Fridays are not like any other day of the week. You see, markets lack liquidity as the day gets older on a Friday, right? Markets don't behave the same way because liquidity dries up. More importantly, though, as traders, we lack discipline as the day gets later on a Friday. So the Friday mindset, my kind of goal on a Friday morning is to get in early when I'm at my best and the markets are at their best, take profit quickly. I always try to get some green on the screen on a Friday morning, remove risk quickly, but always leave a runner. Because one thing about Fridays, about half of all the Fridays make these big, illiquid, low volume runs into the closing bell on a Friday afternoon. So again, two things in my mind for tomorrow. One is that non-farm payrolls, 8:30 Eastern time. Expect some fireworks around that time. And again, don't forget the mindset of Friday. Get in early, take profit early, get some green in the account tomorrow. Get rid of risk quickly. Remember, try to leave a little piece open as a runner because Fridays, they love to run. That's on my radar for tomorrow. Now, it's good to know when the news is. Let's get back to our charts because we all know the money is made on the charts. I mentioned earlier that 60-minute charts right now are giving us these big ranges, buy low, sell high. Let's now drill down to some faster time frames, some tick charts. You see, tick charts make pattern recognition a hell of a lot easier, and we trade entry patterns mostly in our trade room. This, by the way, is a 7,000 tick chart, all the time frames you'll need in the upper left-hand corner, and that yellow line right there is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades each week in our trade room with all the members. Now, there are two more important clues here on these tick charts. One big clue is this big wide bear channel you can see here on the S&P and SPY. Connect those lows up around that high. Now, like we teach in our free video classes, channels like to rotate. They like to rotate back and forth. So we would think that buyers are going to buy around the lows, sellers are going to sell around the highs. But arguably, the more important clue here is this new trading range. It's a bear market into a range. What do we know about ranges? Ranges act like magnets, and they love to rotate back and forth using things like pendulum swings, things like expanding triangles. We talk about this a lot more in our free video classes, right? So we know in this situation, we want to be selling high and buying low. Let's talk about some entry tactics on this, right? Because I think we all get that, right? Buy low, sell high. That's nothing new there. But timing the entry is the most important part. Now, my favorite trade for tomorrow is certainly going to be some bear traps, buy below the low of that low. We'll talk about that in a moment, though, on the Nasdaq. Let's talk about price going higher here first. I would love to sell back off the high of that channel and use that range as a magnet. But you know what? I can't blindly sell into that area. So what I'm gonna do is I'm gonna look for a kind of a pattern sequence I call a failure into bull trap combination. It's very simple. As we go higher, this is a horrible place to be a buyer, right? You're at the top of that channel, above that range. We saw the big range there on the 60-minute chart. There's no way I want to buy up here, but I'll bet a lot of rookies will try to buy this thing as it goes higher. If I can see buyers trying once and trying twice at these highs, see, now they're trapped long, and now I know where their stops are. Now think about this. If you're stuck long and you get stopped out, you become a seller on the way back down. This is an area where everybody is selling, right? The sellers are selling high up here, and once the buyers get stopped out, they become a seller as well. Everyone becomes a seller with this type of pattern setup. In our free video classes, I call these failure patterns. 1 try, 2 try, trap the buyers in, run it back down into that trading range. Now watch closely, because oftentimes we get a second bite at the apple with what's called a trap pattern. Now, trap patterns, you have to learn this pattern. First things first, it starts with a lower low in price and a separation off that moving average. Once you see separation off the 21 EMA, lower low in price, look for that, what is in this case a bull trap pattern. Nice strong signal, closing back below the moving average, failure into a trap combination. That is kind of the nuts and bolts of what I'm looking for to sell off the high. Now, be aware, a lot of times we'll get our failure running back down again, but you know, the buyers hold a pullback on this and they run right back up and double top it once again. Like over here, for example, right? Double tops are not a reversal. They were a gift, in my opinion, for the sellers up here, because at this point, anybody who buys on that pullback, they're taking their profit back up at these highs right now, right? Buyers here become sellers here. So if we're lucky enough to get a double top on this, it's the same basic pattern. Let those buyers try a couple times. Don't pick the top, right? I don't know how far this thing will go, right? It may keep on going higher. And if it does go higher, I'm going to talk about that in just a moment. Don't you worry. But if we do see buyers come in, try once, try twice, now I got you. Now you're trapped. Failure pattern into that trap pattern combination. And again, the key to the trap pattern is to get that strong push lower. It'll separate off that moving average and get that lower low in price. And you want to get in right above that high like that. Now, sometimes these get pretty wild, right? For example, we saw one today, up, double top, buyers once, buyers twice. There's that failure. And look what happens here. It collapses and runs back down. But guess where everybody, oh my, would you believe that? Of course they wanted to sell that bull trap. That's a failure and a trap combination. So you can see there's a lot of variations of that, right? Makes sense? Now, one other variation is a V top on this. Sometimes we'll run up, we'll get whacked back down, and we'll start getting this grinding move going lower here, right? These are tough, right? Because we don't get that pop up 1, 2 back down. It kind of V-tops off that high. If it V-tops and grinds back down again, watch this. I'm gonna draw a trend line off the lows. I'm gonna bring that trend line up around the highs. Now watch closely. Look left, find some prior swings, and repeat after me. First test is the best test. The first test of that new channel, and of course, I love trap patterns. So trap pattern I'm showing you right here. This could be a trap pattern. It could be a failure pattern. It could be a pullback combination. This will make a lot more sense, of course, if you guys are going through our free video classes. But again, if it V-tops off that high, don't chase after it. The worst thing you do is chase after it. Wait to sell high, find that new channel, and usually that is where the money is made in these kind of V-top scenarios. Now, let's slow down for a second because we've covered a lot so far. I know most of you guys watching right now, you know these patterns. You're making money with traps and failures. But if you're watching for the first time right now, this might be a brand new strategy, a brand new language to learn. But don't you worry, I teach this entire strategy. I have hundreds of examples of failures, traps, pullback combinations, and a whole lot more. I cover so much more of this in our free video classes. What I'll do is I'll put a link up top here for you, upper right-hand corner, grab that link that popped up right there, and take that free trading course because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that tells us exactly where to look for the winning trades each day. More importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, failures, traps, the whole entire roadmap. I cover everything in that free video course. Guys, the bottom line, the markets are way too good right now not to be making consistent money. If you're missing the best trades each day, if you lost your confidence in your current trading strategy, hit that link, take that free video course, learn the roadmap, start making money on your own. Perfect for anyone who's serious about making money in these markets. And also be aware too, I'm gonna put all the important links tonight the description of the YouTube video. Grab the free video classes down there. We trade together every morning in our trade room. I'll put trade room membership information links down there as well. And also too, I post a lot of updates, charts, videos, mindset stuff on Twitter or X throughout the day. If you're on Twitter X, give me a follow. Again, all the details you'll need, the description of that YouTube video. But now you know though, now you know as we go higher, think about that failure into trap combination, right? Failure trap combination, and I give you guys some variations of it. Get mine for tomorrow as well. Now, in a moment, I want to talk about one of my favorite trades for tomorrow is the fake out breakout, the bear trap off that low. There's a slight variation on that one, so you want to stay tuned for more on that. But let's get real for a second. Tomorrow is Non-Farm Friday. What if this thing just rips? If this thing rips going higher, this trading range becomes now a breakout pullback of that trading range, right? Makes sense? Now, it's easy to forget, we're still an overall bull market here on the hourly chart on the S&P, right? So don't be surprised here if this thing either fake out breakouts off that low, right? Or rips up again on whatever the news comes out tomorrow morning. I don't know what the news will be. All I know is we'll trade the reaction tomorrow in our trade room. If we end up racing higher here, I want you to think about a breakout pullback. Now, what does that mean? Breakout pullback is very simple. First of all, it's a two-legged pullback. What is a two-legged pullback? A two-legged pullback is like it sounds, right? It's one leg, two leg. Now, when I say two-legged pullback, think about a measured move that goes a bit too far, right? A measured move being an A, B, C, D, right? Or 100% extension. So first of all, if this thing just rips, and of course, I'm not drawing it very well right now, right? But if it just rips with that off news tomorrow morning, this area here now becomes a key area of support, right? So what we'll do is don't buy the pullback here. Wait for the price to get below the moving average and make a two-legged pullback. Think about a measured move that goes a bit too far. Now, that will give me the general area of where I want to get in. Now, one thing about me, I don't blindly buy pullbacks like this. It's kind of a rookie mistake. Most of us have learned that already. We don't blindly buy at support or sell at resistance. What I do is I wait for a pullback, because this is a horrible place to be selling, right? I would not want to sell, not after that strong breakout, if we get a strong breakout higher from non-farm payrolls tomorrow morning. What I'll do here is use that same failure into trap combination. One try for the bears, two try for the bears. Why two tries? Because now I got you. Now you're trapped in. And now think about this, right? This range now becomes a key area of support. The bears are trapped in short with all of that momentum. Anytime we see a strong move like that, the buyers are going to want to punch their ticket and go back up and retest the high. Bears try twice. They're trapped in. That's a failure pattern. And then as we go higher, it's always going to be that add-on trade, right? That trap combination. In this case, it's a bear trap pattern, right? It's a higher high in price and move right below that low. So if we do get, and again, I don't know what tomorrow will bring, right? Nobody knows what the market will do after non-farm payrolls tomorrow. I like the idea of going up and shorting back down again, but if this thing just rips everyone's faces off and runs higher, we then look for that two-legged pullback, a bit more than a measured move. We saw a great example of that earlier on in the week here on these videos. And then again, it's that failure trap combination. And we know, now here's one cool thing about range breakouts. The size of the breakout is used as a measuring leg, right? So the breakout leg is the measuring leg. Once we know how big that breakout leg is, then we'll know, pin at that low, and that creates the big target for us up overhead. In these scenarios, we'll take the majority off at the top of that move, right? 3/4 of the position comes off there, leave that runner, and the runner is left because Fridays love to run. That measured move is useful as a run. Remember, if you want to make more money, don't trade more often, don't trade more frequently, just get better at holding on to your winners. And one easy way to do that is anytime we see a breakout, the breakout leg is the measuring leg. Markets love to make those symmetrical ABCDs using that breakout leg. All right, so now I think we got a pretty good game plan here. How to sell it as we go higher, how to buy it if this thing really rips higher off news for tomorrow. Last but not least here now, or next up I should say, let's talk about as we go lower. And to do that, let's go to the Nasdaq. Nasdaq's getting lonely over here right now. Let's go to the Nasdaq here. Nasdaq 60-minute time frame, very, very similar, right? Big move down into a trading range. Again, ranges act like magnets, buying low, selling high. And again, don't forget, we are still overall bullish here on the 60-minute time frame when you zoom out and look at the big picture. Let's go to the tick charts here now. Tick charts, again, are so much easier to trade with, right? I like to use the hourly chart for the big picture, overall direction, big picture stuff, but tick charts that make entry timing so much easier. And look at this fat, juicy range we have right here. Now, if you know my style of trading, you know I love ranges because ranges act like magnets, buy low, sell high, right? Trade that rotation. I know a lot of you guys are taking my free video classes right now. Lots of examples of how we trade ranges in that free video course. You'll notice the triangle, right? Triangle off the highs, triangle off the lows. You'll notice the pendulum swing off the highs, the pendulum off the lows. These are all key areas of support, key areas of resistance. Now, we talked earlier on the S&P about going up, right? The failure into that trap combination, right? So nothing is new there. The V-top variation of that, the double top, of course, we saw earlier today. Great example of Nasdaq today, running up, double topping, 1, 2. And then are we surprised? Look where they came back, right? Are we surprised? Run up, 1, 2. There's your failure. And markets love to come back and just give those bull traps a bit of a kiss right there. Everyone's waiting for that short. So same game we talked about earlier on the S&P. On the Nasdaq here, though, and by the way, one thing I want you to think about here is one kind of mantra we have in our trade room is failures at the edges and traps as it rotates. Failures at the edges and traps as it rotates. What I mean by that is as we go lower, Again, I can't pick the bottom on this, but I know there's a lot of support down here, support down here. I would never want to sell down here, right? I wouldn't want to sell. Now we may get a big breakout going lower after news tomorrow morning, but we'll talk about that, of course, in a moment. Not a good spot to be a seller, right? I can't pick the bottom. I don't know how far it will go. What I do know, though, is once those bears come in and get short a couple times, here's that failure at the edges, right? Here's that failure at the edge of that trading range. Failure, two try failure. Then trap as it rotates. Traps as it rotates. Remember the bear trap pattern? Higher high in price, separation away from the moving average. And of course, I want that bear trap entry off of that, right off of that or below that prior swing. Failures at the edges. Traps as it rotates. Failures at the edges. Traps as it rotates. Once you understand that kind of core principle about how ranges work and the best way to take these trades, I'll tell you, everything gets a whole lot easier because you know what to look for each day. And again, as I mentioned earlier, right, we may wind up running lower, popping up, double bottoming. It may go a bit below that bottom, like over here, right? That double top. Well, it's not a straight double top, but more than double top, right? It's fine. If it goes through the low by a little bit, who cares, right? Doesn't matter. It's even better, actually, because that will convince more sellers to commit to it. It's that same thing. Don't forget, double bottoms below a range, just like double tops above a range, are another bite at the same apple, right? It's a gift to us traders because anybody who sells short right here, where's their profit target? Yeah, back at that low, right? Sellers right here become buyers down here. Once those bears try once, try twice, now we've got you. Now you can't leave. Now you're stopped out, right? Now those stops get triggered and that run back up again. That failure into that trap combination, right? Over and over again. Repetition is where the money is in trading, right? We're not trying to reinvent the wheel. Trust me, once you learn how to make money with these, you'll keep on milking this cow as much as you possibly can as well. So failure into bear trap combination, failure at the edges, traps as it rotates, and probably the least desirable, one we don't want, but we'll be ready for anyways though, is the V bottom, right? Sometimes we get that V bottom where it'll run lower and there's so many buyers down there at V bottoms off that low and begins to grind going higher. These are easy as long as you know what to do. The hard part is that voice in your head will tell you up here, get in, man. The voice in my head always says, come on, dummy, you're missing it, bro. Get in, right? Tell that voice to quiet down, get a game plan to follow here, mark off that high, mark off that low, look left, find some prior swings. And remember, repeat after me, first test is the best test. First test, the best test. What that means is it's the first test off the low of that channel. And again, I love traps. You guys will learn more about that in the free video series. I love traps. This could be a trap pattern. It could be a failure pattern. It could be a pullback combination. Again, this will all make a lot more sense once you get through the free video course. So any of the entry patterns you guys are learning right now in the free video classes can be applied off of that hidden channel, right? That V bottom first test is the best test. And also too, don't forget, same thing we mentioned earlier on the S&P. If this thing rips, right? If it just dumps, right? Going lower here, if this thing just takes off and runs lower, now remember, this trading range becomes a key area of resistance now. What was support becomes resistance. Now at this point, remember, it's all about the two-legged pullback, right? What that means is one leg, two leg, a bit more than a measured move. That's the key, a bit more than a measured move. And again, for all I know, it'll pop up and keep on going higher. And if it does, by the way, right? If it pops up and begins to grind going higher like that, bingo, that's your cue now. Mark that high, mark that low. Don't miss that first test. Whenever a market grinds higher, in almost every situation, whenever a market grinds higher like that, find that new channel and you know where the money's made in that scenario. Most of the time, if I see a strong run down like that, we're going two-legged pullback, a bit more than a measured move. the underbelly of that range acts as resistance, right? As resistance. All of that strength going lower is going to want to retest that low, and all we do is wait for the pullback. Buyers once, buyers twice. Now you're more than welcome. You can try to pick that top right there, but I never had much success trying to pick tops and bottoms. I always had better success with this over a long period of time. One try, two try, and roping in those stops. And again, it's always that failure into that trap combination, right? That failure into trap combo. Now, what should be very interesting here though is that once we go back and retest that low, now we can look for that same failure pullback combo, right? That failure into trap combination going higher. So keep that on your radar as well. That same thing will apply, of course, overhead. We go up, right? Look at pullback, retest, 1, 2, and back down again. Remember, double bottoms below a trading range, double tops above a trading range are a gift, right? They're a very easy way to make money. Remember, we don't pick that bottom, do we? No. We trap in those bears and we squeeze those stops going higher. I just want to make sure that everybody knows if this thing just gets ripped and runs lower here, we're not going to chase after it because obviously we're too low to sell down there. Get that measured, get that two-legged pullback, a bit more than a measured move, trap those bulls in, run those stops, add more on the bull trap going lower, and we'll keep an eye out for a double bottom reversal tomorrow morning as well. All right, guys, that's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room. I'm going to put all the important links you'll need in the description of the YouTube video. Grab the free video classes. Definitely start there. Start making money on your own. Come join us in our trade room. I'll put trade membership links down there for you. All the Twitter feed stuff. All details you need to learn more and start earning more in the description of the YouTube video. Guys, hope you learned a bunch in the video here tonight. Hope you use this knowledge to earn a bunch and make a killing on Non-Farm Friday. And hopefully I'll see you sometime soon. Trade with us, 8 o'clock Eastern time as a member in our trade. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye for now.